COVID-19 is going to affect many businesses, but most especially the financial statements. The income statement is going to see a major change due to the COVID-19 because the income statement measures the performance of a business over a duration of time. That's usually over a year. The income statement is reflected as the income coming in, which is represented as revenue, and then the cost, which is expenses. A lot of businesses have been forced to stop trading due to the social distancing regulations and due to the lockdown. This would be reflected in the income statement as low revenue, but the expenses will remain the same. This is due to businesses still having to pay for rent, still having to pay for furloughs and other things like that. Even though there has been a period of time when landlords and property providers have given a grace period, this cost will still occur during this financial period. Due to the fact that businesses can't operate at full capacity, their income statement will look something like this. Low income, high cost, and that means they will be operating at a loss due to the virus. The second financial statement to see a change is the balance sheet. The balance sheet is a snapshot of what the business owns and what they owe other companies. The balance sheet is made of two components, assets and liability. Assets are what the business owns, liability is what the business owes to other companies or individuals. This may not change as much due to the COVID-19, but still there's a possibility that the liability section could be higher than the assets. The way these two components will be affected by the COVID-19 is assets will decrease in value due to the uncertainty of the value of the assets. So things like land may either increase or decrease in value, the value of equipment, the value of money, and the value of other assets that the business may own. The challenges that a business may face, depending on the size, may be to balance both the assets and the liability to make their statement balance. On top of the information I have already provided, it is also worth noting that the liability section could see an increase due to business loans being taken out to meet and accommodate the business needs. Many businesses during this time will be operating at a loss due to the inability for people to go outside and spend their money. There are many government schemes to help businesses to improve the financial statements and to operate at break even. This is when a business isn't operating at a loss nor a profit. Many businesses, depending on the industry that they operate in and the scale of the business, may find it challenging to keep the balance sheet balanced. This is because there's going to be a longer time for trade payables to be paid and trade receivables to also be paid due to businesses not being able to operate fully. During this period, it is important that businesses effectively communicate with the accountant and accounting department and also keep up to date with the government guidelines and government policies and schemes.